I'd like to ask you, Jeff Love, what is the biggest risk?
To me, it's the same for me because I'm a real estate investor myself, as well as advising real estate investors. And to me, the biggest risk with real estate is exposing my non-real estate assets to a real estate related risk. And what I mean by that is if I own a two-unit apartment building and the tenant has a party, someone slips and falls, now I've got a claim against me as the landlord. Um, it may be a really bad fall and someone dies, and they may want to sue me. It's a $5 million claim. Now I may have insurance, which I hopefully do, get it from someone like yourself, and that gives me protection. But what if that insurance isn't enough? My property insurance, my umbrella, that only gets me to 3 million. How do I protect myself? Because I don't want my bank account, I don't want my car, my kids' college funds, my home. I don't want that exposure for one particular investment. Real estate is just one aspect of my portfolio. I want to try to keep it contained. And one of the ways we do that is through insurance. And that's my first answer. But insurance may not always cover it. There may be an exception. So how do we go one step further? And to our clients, that's part of our corporate practice, our entity structuring, and what those limited liability companies give you are limited liability, whether depending no matter what the form, whether it's a corporation, a limited partnership, an LLC. What that does is say my exposure is only the company. I can't, unless I do something wrong and it pierces the veil, myself as the owner of that company, you can't come after my personal assets. So I take my two-unit apartment building, I put it into Jeff's LLC. Now there's that slip and fall. They may make a claim against me. They may get my $3 million insurance coverage, and they may take the property to cover the other $2 million of the claim, but that's all I lose. I don't lose my card, my bank accounts. That's all safe. And to me, that's the biggest risk is being able to really mitigate the risk from each property and segregate my assets to make sure that if one card falls, all of them don't. And so what we do with clients is help them segregate those risks, maybe even have different properties in different companies. One has specific environmental risk. Maybe one is an apartment building with lots of tenants and lots of Amazon deliveries. We want to keep that separate from my industrial property that's worth a lot more money or my personal assets. So I think that corporate structuring and understanding what an entity that grants limited liability protection, the benefits that that can really give you in mitigating risk and exposure.